Hello, everyone, and welcome to today's webinar, Political Law 101 Bootcamp, Part 1, Lobbying Disclosure Act Compliance. Today's webinar is being recorded, and you will receive a follow-up email within 24 to 48 hours with a link to view the recording and a copy of the slides. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time during the presentation. We will collect these and address them during the presentation. Today's presenters are Jim Call and Heidi Abeg, partners at Whiteford. I'll now turn it over to Jim.
Thank you, and good afternoon, everyone. I'm Jim Call, and I'm joined by my partner, Heidi Abeg, and we head up the political law practice here at Whiteford, Kaler, and Preston. And if you could go back one slide, please, on the presentation. Today is the first of three parts in our Political Law 101 Bootcamp. Part 1 is focusing on the Federal Lobbying Disclosure Act. Part 2 will be about a month from now, and that will focus on campaign finance and political contributions at both federal and state level. And Part 3, probably 2 months from now, roughly, will be focusing on government ethics and gift giving to public officials at the federal and state level. So if we can go to the next slide, please. Here's an overview of what we'll be covering today. First, I'm going to start with a big picture overview of the Lobbying Disclosure Act, what it does and what it doesn't do. Then we'll get into more detail and look at questions like who is a lobbyist and what triggers registration. We'll talk about the reporting issues required on lobbying issues, lobbying income, lobbying expenses, as well as certain semi-annual reports or other kinds of contributions and payments related to executive branch and congressional officials have to be disclosed. And we're going to wrap up to address some of the common questions and scenarios that are presented to us, and thought it might be helpful to you to walk through those to give you a better sense of the law in its application. This is a 101, so we'll be covering the basics. For those of you for whom this is entirely new, this should give you a good underpinning. We'll have some more sophisticated questions that we'll put in there. So for those of you who are more familiar with the LDA, there's should be something for everybody in the presentation. I think the best thing is if you have questions, let's take them as they come up. Probably better to answer them in context rather than waiting to the end. So please submit your questions on the question tab that should be on your screen, and we'll get to those. So with that, why don't we jump into an LDA overview on the next slide. So very big picture, I think it's important to understand what the Lobbying Disclosure Act does and what it doesn't do. First of all, the LDA only covers influencing Congress and certain executive branch officials. It has no application to lobbying at the state or local level, where there are many laws across the country and they differ widely. It's also important to understand that the definitions of lobbying in the LDA are quite different from the definition of lobbying in the Internal Revenue Code. And many of you are probably familiar with those definitions, either because you're a nonprofit organization and do 990 filing, or you're a for-profit corporation and you need to calculate non-deductible lobbying activity expenses. The important thing to note is that some of the activity that might be considered not lobbying under the Internal Revenue Code may be lobbying under the LDA and vice versa. I'll give you an example. For those of you who are in the 501c3 world, you probably know that there are certain kinds of educational activities you can engage vis-a-vis members of Congress, and that's not considered lobbying. Whereas under the LDA, it's more than likely a possibility that the same activities would be considered lobbying under the LDA and might trigger registration and reporting. Another thing to keep in mind is the LDA only deals with direct lobbying of public federal officials. Grassroots lobbying is not included. So for organizations who have outreach to the public, asking them to get in touch with their members of Congress or administration appointees. That is not covered by the Lobbying Disclosure Act. Another important feature of the LDA, and Heidi will be getting into this in greater detail, is there are certain threshold levels of activity before which lobbying isn't required. And so there is an opportunity for an organization to engage in some lobbying without registering and reporting. And for your organization, that might be enough. You may never have to go above that threshold and worrying about registration and reporting. Final point to make here is if you're an organization, you retain an outside lobbying firm, and that's your entire relationship or engagement in lobbying activities, then your organization will not need to register or report. All of the registration and reporting will be done by your retained lobbyist. We can go on to the next screen. So once your organization is registered and you have a registered lobbyist, there are a lot of obligations that go along with it. There are the quarterly reports about activities and income that need to be filed. Heidi will get into detail on that in a second. There's semi-annual contribution reports that have to be filed. Very importantly, lobbyists and lobbying organizations are subject to special limits on gift giving to members of Congress and staffers that are not applicable to non-lobbying organizations. Lobbying organizations are also subject to a range of other obligations under the law. For example, the General Accountability Office, the GAO, conducts annual random audits of lobbying reports. And so they may pick your report out of the hopper and inquire about the information that you have reported there. Violations of the Lobbying Disclosure Act can result in fines of up to $200,000. And if an organization were to knowingly and willfully try to evade the Lobbying Disclosure Act, there may well be criminal consequences of that. The Lobbying Disclosure Act is enforced by the Department of Justice, and it's the U.S. Attorney's Office in the District of Columbia, and they have engaged in several prosecutions in recent years. They've had many settlements with folks who have not been abiding by the law, which is in stark contrast to what we saw 15, 20 years ago when the law was rather lightly enforced. So with that as an overview, we could go to the next screen and I'll turn it over to Heidi, who will go into details on who's a federal lobbyist.
Thank you, Jim. Under the LDA, an organization or lobbying firm must register if an employee satisfies the first and second prongs and the firm or organization satisfies the third prong. And we'll go over some of these terms in a minute. First, the employee has to make 2 or more lobbying contacts with a covered legislative or executive official regarding covered matters. Note that this applies to employees of the firm or organization. It doesn't apply to volunteers or board members. Second, 20% or more of the employee's time for the client has to be spent on lobbying activities within any 3-month period. And third, the retained lobbyist or firm's income is expected to exceed $3,500, or the lobbying organization's expenses for lobbying activity are expected to exceed $16,000 in a calendar quarter. Now, these amounts are based on the Consumer Price Index and adjusted every 4 years. The next adjustment to these numbers will be January 1, 2029. So if all 3 of these are met, each lobbyist is listed in the registration statement, the LD1, or in a subsequent quarterly report, the LD2. Outside lobbyists are not listed on the registration or quarterly report. Now, if you are filing the LD1, it is due within 45 days of the date the employee or lobbyist is employed or retained to make more than 1 lobbying contact and meets the 20% time threshold, or 2, on the date the employee or lobbyist who meets the 20% time threshold makes a second contact. If we could advance to the next slide. As I mentioned, the first part of the test requires 2 or more lobbying contacts. So we need to look at what a lobbying contact is. It is an oral or written communication with a covered legislative or executive branch official with regard to the formulation, modification, or adoption of federal laws, rules, regulations, executive orders, or any policy or position of the United States. This includes legislative proposals. Unlike some states, you can have a federal lobbying contact even though no bill has been introduced. It also includes the administration or execution of a federal program or policy, including federal contracts or grants and their negotiation. And finally, it includes Senate confirmations. If we could advance to the next slide. There are about 19 exceptions. And while a contact may not be a lobbying contact, it might still be a lobbying activity if it's made in support of other communications that are lobbying contacts. The most common exceptions include testimony given before a congressional committee or submitted for inclusion on the record, written information in response to a request by a covered official for specific information. But note that to come within this exception, your response has to be in writing and provided only to the covered official who requested it. Information that's compelled by law, for example, a congressional subpoena, including information that you're required to provide by a federal contract or grant, are also accepted from the definition of a lobbying contact. And information provided in response to a Federal Register or other notice, for example, written comments on proposed agency regulations. And again, you need to provide it only to the government official listed in the notice. If you copy another government official, you've made a lobbying contact as to that covered official. A communication that you make in a speech, article, or publication that's made available to the public. For example, if you urge adoption of a legislative proposal on your social media account or put a full-page ad in Politico, the fact that a covered official follows your social media channel or subscribes to Politico doesn't turn that communication into a lobbying contact. Generally, a mere request for a meeting is not a lobbying contact as long as there is no attempt to influence. The exception to this is if a former member of Congress or similar high-ranking official is calling to schedule the meeting. The fact that they are calling to schedule a meeting is presumed to be an attempt to influence. We can move to the next slide. Definition of covered officials includes both legislative and executive branch officials. The legislative branch is a little easier. I mean, it includes members of Congress, elected officers of the House and Senate, employees who work for members, committees, leadership staff, working groups, caucuses, and other officers and employees who file financial disclosure reports. So basically, it covers virtually everyone in Congress. The executive branch has a much more limited definition and includes the president, vice president, officers and employees of the executive office of the president, and officials and employees serving in executive levels 1 through 5 of the executive schedule, and members of the uniformed services serving at or above grade O-7, as well as Schedule C political employees. Last summer, OPM unveiled what's called the Plum Reporting and Plum Data website, which contains all of the previous information that they published in the Plum book. Some of you may be familiar with the Plum book. It was a static book that contained the names and titles of presidential appointees. This website is a huge improvement over that static Plum book, which, as I mentioned, was published every 4 years usually towards the end of a president's term, which made it not very useful to help you identify who the covered officials were. The website more easily allows you to determine those Schedule C appointees, and the data as of now is current as of June 30th, 2025, but updates will be made to it not less than once a year. So that is a huge improvement. If you could go to the next slide. Once you've determined you need to register, and you register, you're required to file quarterly reports. These reports are filed online with a single sign-on with the Clerk of the House and the Secretary of the Senate. The due dates are listed there on the slide. If those dates fall on a weekend or a holiday, the due dates slide to the next business day. And it's important to note that reports are required even if you have no lobbying activity until you terminate the registration. The reports require you to list the issues that you have lobbied on. Jim will go into this more in a minute, but basically you need to identify the bills, policies, and other matters that are the subject of your lobbying activities. Lobbying firms are required to report their income, and this is a good faith estimate of your income that's paid by the client or paid by someone else on behalf of the client. You are not required to include income for other non-lobbying services, so you can prorate that and use a reasonable allocation for mixed services. And this income is reported when it is earned or accrued, not when you are billed or received the income. You're also required to include reimbursable expenses that are separately invoiced. And finally, all of this is rounded to the nearest $10,000. Next slide, please. Lobbyist employers report similar to what lobbying firms report, except that instead of reporting income, they report expenses. And expenses are also a good faith estimate. And you report all of your lobbying activity expenses. Lobbying activity is defined as lobbying contacts and efforts in support of those contacts, and includes your preparation and planning activities, research, and other background work that is intended at the time it is performed for use in lobbying contacts, as well as coordination with the lobbying activities of others. So all of these expenses include things like activities by your in-house lobbyists and support personnel. You should include prorated salaries of those who are lobbying, even if they are not required to register because they don't meet the 20% time threshold. You also include outside lobbyists and consultant fees, even if the payee has a separate obligation to report. You would include percentage of dues that you pay to trade associations that relate to their lobbying activities, as well as other disbursements, including your overhead, printing, and postage costs. And again, like the lobbying firm, you round to the nearest $10,000. So due to this rounding, amounts that are reported on the LD2 usually do not match what is reported on your Form 990, and that is okay. And over-reporting on the LD2 is also acceptable. And with that, I will turn it back over to Jim.
We'll go to the next slide. I want to go a little deeper into the calculating lobbying activity expenses and what goes into that, and touch just briefly on calculating the lobbying income as well. So the LDA is in somewhat of an unusual statute in that it requires the registrant to make a good faith estimate of lobbying activities expenses. I don't know of any other statute that requires that kind of good faith estimate. For example, when you're dealing with the Internal Revenue Code, you're going with much greater specificity than a good faith estimate of your income during the year. And not only that, you come to this good faith estimate. At the end of the day, you're rounding up or down to the nearest 10,000. So far from exacting precision. In addition, the law really doesn't tell you what kind of formula you are required to use to get to that good faith estimate. Here's what the requirement, however, is based upon congressional guidance to make sure you're in compliance with getting to that good faith estimate. Number one, you have to have a reasonable system for computing your lobbying activity expenses. This is not a one-size-fits-all proposition. It's going to be tailored to the particular circumstances and needs of your organization. So what works for a small-ish 50-person organization will be vastly different than what a multinational corporation has to do to get to a good faith estimate. The important thing is to make sure that you've accounted for all categories of expenses that need to be reported. And in this regard, remember, as Heidi was talking about, lobbying activities by registered lobbyists that you employ, as well as non-registered lobbyists who are supporting the effort. All of those expenses need to be captured as a part of that. You may have a very elaborate survey system that has to be taken on in your organization if there are many, many players that need to be surveyed. On the other hand, a smaller organization may have 5 or 6 or 10 people that need to be touched base with to make sure you're capturing those expenses. Once you have that system in place, then you need to make sure that you comply with that system on a quarter-to-quarter basis. It's one thing to have a great system and sitting on a shelf. It's quite another thing to make sure you are following it each and every quarter in a consistent manner. And finally, it is absolutely essential to keep records that document your computation of lobbying expenses. And why is that important? Well, if your report is ever pulled up by the GAO in one of their random audits that they do of reports, you're going to need to be able to explain how you came to that expense number. And if you can show that here's our system, here's how we reach out, it seems reasonable under the circumstances, here's our computation sheet that shows all the expenses that are in there, and we religiously follow this every quarter, there's not much that the GAO is going to be able to do to get behind those numbers and question the veracity or the reasonableness of the system that you have in place. Just briefly on lobbying income for lobbying firms, it's a lot easier because you're dealing with a number that's likely set forth in your contract, and the only question there is going to be whether your allocation between lobbying and non-lobbying activities is reasonable. So it's a bit of an easier proposition. So if we could go on to the next slide, please. Under the Lobbying Disclosure Act, the organization has the option to calculate lobbying expenses by either using the LDA definitions of lobbying or the Internal Revenue Code definition of lobbying. If the organization makes this election, it has to follow it for an entire calendar year. We've had many clients who either have done this or they ask about doing it. Oftentimes it's an idea that gets generated through the accounting folks in an organization, and they'll want to know, isn't it just easier for us to use one method because we're going to have to do it for the IRS? Why don't we just use the same calculation method for both? And the answer is, it may not be easier as you're doing your lobbying reporting, and it may not be as accurate when it comes to reporting federal lobbying activity. Let me give you some examples. If you look at, I'm not going to go through every category on the chart here, but if you look at that first category where it says coverage, well, as we can see under the LDA, only federal lobbying activity is covered. However, under the Internal Revenue Code, it's used to measure federal, state, and local lobbying activity. So if you make this election in your federal lobbying report, you're going to need to include the expenses of all of your federal, state, and local lobbying, even though your report to Congress really only is focused on your federal activities. So if you make the switch from one year to the next, in the year you make the election to use the Internal Revenue Code definitions, it might greatly inflate the numbers that you see in your reports because you're including all the state and local activity as well. I'll give you another example. If you go down to, I think it's the 5th column where it says row where it says grassroots lobbying, as we mentioned before, that's not included at all for LDA purposes. However, it is included under the Internal Revenue Code. So if your organization has active grassroots outreach at the federal level or the state level, you have calls to the public to get them to contact their member of Congress to support or oppose a bill, or you're doing that at the state or local level, all of that activity will also be incorporated into your lobbying activity expenses, and again, further inflating what that number would be, as opposed to if you're using the Lobbying Disclosure Act. So important considerations as you make that election. Again, if you make it, you have to use it for the entire year.
Jim, we had a
ahead.
question about how long the documents need to be kept.
Why don't you take that answer?
Well, you certainly need to keep them for as long as you could be subject to an audit. So at least 3 years. Some organizations will keep them for as long as 7 years because you're also keeping some of the same documents because they're necessary for your tax returns.
Okay, the last point I wanted to make here is, and this goes to the ease of doing a computation. Keep in mind that the LDA reports are done quarter to quarter, and you have to submit them 20 days after a quarter has ended. Doing the LDA calculation, there are fewer moving parts, so to speak, and it's easier to do that calculation in a 20-day time frame. The Internal Revenue Code definitions covers much more activity, and it may be challenging to do that in that 20-day time frame. And keep in mind the very purpose of the Internal Revenue Code definitions, the primary purpose, is for Internal Revenue Code reporting, which is often a year or more after the event. So you have the advantage of time to do that calculation. So in the time crunch that you get every quarter, the easier calculation may well be using the LDA definition. We could go on to the next slide. A few key points to remember and with respect to lobbying issues and lobbying contacts and activities. How do you refer to this earlier? In terms of reporting issues, what the law requires is to provide adequate information to inform the public about the client's specific issues. What does that mean? Well, if there's a bill or a name and number, then that should be included in the report. If it's a bill that's very large and you're lobbying just particular sections or subjects, then that should be mentioned in the issues that are reported. If it's a more concise bill and you're lobbying the entirety of the bill, you can say that. HR 25, whatever the name is, and all parts of the bill lobbied. On the other hand, it is not necessary to report or list whether you are supporting or opposing the bill or any part of the bill. You may do that, but there's not a requirement that that be reported. With respect to lobbying contacts and activities, please remember that lobbying contacts can occur absolutely anywhere. It may be taking place in a member's office or a hearing room on the Hill, but it could be anywhere. It could be at a charitable fundraising event, at a ball game. You could be standing on the sidelines at your kid's soccer game. If you're having a substantive conversation about covered matters with the official, it is a lobbying contact and needs to be captured in your reporting. On the flip side, the fact that you have met a an interaction with a covered official does not necessarily make that a lobbying contact. If you're saying hello to a member of Congress at a wedding you're invited to and there's no substantive discussion, that is not a lobbying contact. So with that, we can go on to the next screen, please. We mentioned earlier that in addition to the quarterly reports, there are also semi-annual reports. These are called the contribution reports. And they're LD 203 reports. The number comes from the section of the law in which this obligation arose. Unlike the quarterly reports, the lobbying entity and individual lobbyists have to file LD 203 reports. A wide range of payments will get reported in these reports, which as you can see on the right, are submitted by July 30th and January 30th. So we've got a reporting date coming up at the end of this month. With respect to political contributions, contributions to federal candidates, federal political parties, and federal leadership PACs are reported, not any other federal contributions that may have been made. If your organization has a PAC, then the PAC's contributions need to be included in the semi-annual report for the organization. And yes, you've already reported this to the Federal Election Commission, but it doesn't make a difference. You have to report them here as well. And then you have to report a wide range of payments related to federal officials. I won't go through all of them right now, but for example, if your organization sponsors an event that honors a member of Congress, the costs of that event have to be reported. If you have made a contribution to an organization that was established, financed, maintained, or controlled by a member of Congress, that's reported. If a payment is to an organization named for a covered official, that's reported, and other kinds of payments that are that relate to officials. It's a long list. With respect to individual lobbyists, what they are most likely to have to report is their own personal political contributions that fall into the categories I just mentioned. If the individual lobbyist also happens to serve on a PAC board, either for its own organization or some independent PAC, it needs to list the fact that it is a PAC board member on his or her LD 203 report. But the contributions by that PAC do not need to be included in the lobbyist's report. Finally, the LD 203 serves one very other important additional use. The organization and the individual have got to certify their familiarity with congressional ethics rules and certify compliance with those congressional ethics rules. For an organization, this can present challenges. The individual who is certifying, signing on the dotted line, so to speak, is certifying compliance under penalty of perjury. So that individual is going to need to have a basis for saying this certification is true. What we recommend is that organizations have an ability to do a survey on a quarterly basis, or you could do it semi-annual. It's easier to do it quarterly when you're doing other surveys on lobbying expenses, but to get input on any gifts that may have been made to covered congressional officials. So you can see if there were gifts were made, you can see that they were permissible. If for some reason something impermissible pops up, you will have time to address that, rectify it, hopefully, so you can make that certification. That way, again, if an audit comes up, there's an explanation as to how the certification was made and what was the basis for it. Very important. While we're talking about the ethics aspects of this and gift giving, as I mentioned earlier, our third part in our series is going to get into detail on what gifts are permitted and prohibited at the federal and state level. So that's a pitch for a future session that we hope you can join us for. Okay, if we can go to the next slide, and I'm going to turn it over to Heidi, who's going to talk about a couple of other sort of unique reporting issues.
In addition to reporting your issues and either your income or your expenses, you are also required to identify two specific types of entities, if applicable. The first is you have to identify affiliated entities. An affiliated entity has to be identified on your LD1 if it is applicable at the time you register, and that's done on line 13, or you later report it on your LD2 on line 25. An affiliated entity is an organization other than the client that contributes more than $5,000 in a quarterly reporting period to fund the lobbying activities of the firm or organization and actively participates in the planning, supervision, or control of at least some of the lobbying activities. So what is actively participates? Common examples of actively participates include things like participating in decisions about selecting or retaining lobbyists, determining priorities among legislative issues or designing legislative strategies, and other substantive planning or managerial roles, such as serving on a formal or informal government relations committee that has responsibility for these things. Having only a passive role is not active participation. This would include, for example, paying a special lobbying assessment or receiving reports on lobbying activities, or attending a trade association's general meeting, or responding to a member survey generally regarding legislative goals. If you don't have authority to direct or supervise, and your role is de minimis, there shouldn't be active participation. If you're required to disclose your affiliated entity, you have to list that on your LD2. There is an alternate disclosure, however. If the affiliate is listed on your website, you can include the web address on your LD1 or LD2. If you go this route, you should make sure that your web page contains all of the necessary information and you update it as necessary. You should also ensure that if you make changes to your website and move things around, that link does not become broken. Otherwise, you need to go back and amend to provide the correct website address. Another scenario that might trigger disclosure of an affiliate is if a lobbying firm retains another lobbying firm to assist it. For example, if the second lobbying firm has special expertise. In that case, the second firm would list the original client as an affiliate on its registration statement. If we could move to the next screen.
I think a question came in that I'm unfortunately not able to see. So I don't know if you can see it on your screen, but it may be the topic that we're on here right now with foreign entities.
I will address this and then I will take a look. The second circumstance where you may need to provide additional disclosure is identifying foreign entities. Certain foreign entities have to be listed on your LD1 on line 14 or reported on line 27 of the LD2. This includes foreign individuals, organizations, and governments. You have to, a foreign entity is someone who holds at least a 20% equitable ownership in the client or an affiliate, or plans, controls, directs, subsidizes, or finances the client or affiliate in whole or in major part, or is an affiliate with an interest in the outcome of the lobbying. The purpose of this is to identify the interests of the foreign entity that may be operating behind the registrant or the client. For example, a common example is if you represent a U.S. subsidiary of a foreign corporation. Another example is if your client is wholly owned by a foreign company, let's say foreign company A, and that foreign company is wholly owned by foreign company B, both foreign companies A and B are going to be listed as foreign entities. So if you have a complex structure, if your client is structured with parents and various subsidiaries, you need to do some due diligence in these cases to determine if you have to identify affiliates and or foreign entities.
I can see the question that came in now is in the chat, not the questions. And it's if you have foreign affiliates, is participation by them a concern for FARA? And let me take a shot at that, and Heidi, maybe you could jump in on the FARA aspect of it as well. If you're dealing with like for example, a U.S. corporation as a subsidiary of a foreign parent, the situation Heidi was talking about, that could raise FARA concerns, but normally there is, if we're dealing with incorporated entities and we're not dealing with foreign governmental entities, registration under the LDA can be used as an alternative to doing a FARA filing. If we're dealing in a non-corporate context, and the foreign affiliate is actually a foreign governmentally controlled entity or a foreign government itself, then analysis needs to be done to determine whether there is actual agency and the U.S. entity is acting at the direction or control of the foreign entity, determine whether there are FARA concerns that can't be addressed by doing an LDA filing. Do you have anything to add to that, Heidi?
I don't. I think you covered that.
Okay.
So I think we can go to the next screen.
So here we wanted to just cover some of the questions we commonly get about lobbying registration and reporting that hopefully can put some of these ideas into context. So I'll start off. I'll ask Heidi, and we'll go back and forth as we're doing this. Again, if it raises questions for you, please put them in the chat and we'll get to them. So number one, is there a particular method for lobbyists and support personnel to track their time spent on lobbying activities?
Well, we talked a little bit about this before. There's no particular method. So I advise clients to pick what works best for them, whether that be timesheets, survey, questionnaire, whatever is best to track and capture the necessary information. And as we also mentioned before, over-reporting under the LDA is okay. So if it's easier for you, if you have a DC office and the DC office only in part engages in lobbying, if you would prefer to just include the entire DC office in your total for lobbying expenses, you're free to do that rather than try to parse out what is lobbying expenses and what is not.
Oh, and I'll just add on that again, the idea is a good faith estimate. And so that's why lots of different methods can be permissible. There's not one size that fits all.
Another common question that we get, Jim, is if a non-lobbyist staffer conducts research and takes that information is included in a bill summary or leave behind that the lobbyist takes up to meetings on the Hill, does the non-lobbyist have to track that time that they spent on that work?
And the answer here is yes. And this is a good example of why it's so important to track the time of both the lobbyists and the non-lobbying support personnel, because those support functions that are in aid of or in support of the lobbying communications of the lobbyist are definitely lobbying activity and are within the expenses that need to be tracked. And keep in mind, it doesn't necessarily just need to be a more junior staffer, so to speak. This could be a corporate executive who's accompanying the lobbyist to Capitol Hill for a meeting to talk about how the bill's going to be impacting the company. And that non-lobbyist executive's time similarly needs to be captured, because that's also a communication and that's activities in support of the lobbyist's activities, even though that the executive would never qualify his or herself as a registered lobbyist. Another question we have, if a staffer has a conversation with a very senior career agency employee about pending regulations, is that reportable lobbying activity?
Generally speaking, no, it wouldn't be, unless the senior career employee has been placed into a non-career slot temporarily. For example, when a new administration comes on, sometimes employees are moved around. Again, you can ask the employee if they are a covered official, and the law requires them to tell you whether they are or not, and hopefully they will know. Sometimes they don't. And this is a case where, again, hopefully the OPM's new Plum website will be helpful, so that you can go on there and look yourself to see if that career agency employee is has been placed in that slot temporarily, or if they are just a career employee, in which case it wouldn't be covered.
The other thing I'll say about this particular question is that if this indeed is dealing with regulations and these communications are a part of an ongoing on-the-record rulemaking proceeding, it may fall out of being a contact altogether on that basis as one of the exceptions to lobbying contacts.
Correct. And again, just a word of caution that you need to make sure that you're dealing with the proper person at the agency. If you start going outside that and having conversations, for example, with a member of Congress trying to influence the rulemaking, then that can turn that into lobbying contacts.
Right. We go to the next slide.
If an individual or an organization is below the registration threshold, can they elect to register anyway?
Yes, absolutely. We get this question quite often, and we've got many clients who choose to do this, even though the individual hasn't met the definition of a lobbyist at all. And why would they do it? Well, there's some folks who feel like they're up on Capitol Hill enough and they're visible enough that they just really don't want anybody questioning that whether they're lobbying without having registered. Maybe their profile that wants them to make sure that it's clear that they are properly registering and reporting. But it's absolutely permissible, and again, it's all a part of you're never defaulted or held against you that you're over-reporting. However, in this case, it's something you want to give very careful consideration to, because once you elect to do that, you're in the system, and then you're going to have to apply with all the comply with all the obligations we've been discussing today in terms of reporting and record keeping, et cetera. So permissible, but should be thought through carefully. Question came in here. Let me read this. Is having a conversation with a covered official about an agency acting beyond their authority or filing a complaint against the agency a lobbying activity? I can kind of break that down two ways here. In terms of conversations about an agency be acting beyond their authority, that may well be a conversation about the implementations of programs and policies, and be essentially in the discretionary category. And so that part likely would be, in my view, covered lobbying activity. In terms of discussions, if the question is about filing a complaint against the agency, normally filing complaints through established proceedings wouldn't be in the lobbying category. Did you have anything to add to that, Heidi?
I would say if you're perhaps speaking with a member of Congress because you want the member of Congress to do something or take some action regarding the agency acting beyond their authority, that's probably going to be lobbying activity.
Okay, back to our final two questions here. So what happens if a lobbyist employee goes to work somewhere else and fails to file the personal semi-annual lobbying contribution report? Does the employer have any obligations?
This is a common situation. I mean, in summary, the employer does not have any obligations. However, when the lobbyist is leaving, the employer should make the lobbyist aware that the lobbyist retains the obligation to file the personal LD 203. The organization or lobbying firm should also make sure to delist the lobbyist on the next LD2. Generally, if the lobbyist fails to file their personal LD 203, the Secretary of the Senate or DOJ will reach out to the employer for assistance in contacting the lobbyist. So if you provide the assistance, that's usually appreciated, and you can even reach out to the lobbyist to remind them of their obligation. But no, the employer does not have any obligations to file that for the lobbyist.
And if that former employee is going to another organization where they're going to be lobbying, they should be reminded to request a transfer in their personal LD 203 lobbying account so that they become associated with the new employer, and so that they're not bothering you, your organization, for the reports that didn't file. If the individual's no longer going to be lobbying, they're going off to a different career, you can remind them to file their report, and they can file that early if they want. And if your organization files the reports for your employees, you can just take care of that with their permission and make sure that's taken care of before they leave. And I think we've got one more question.
Yes, another common question we get is, can a lobbyist work for two lobbying firms? And if they can, does the lobbyist have to file a personal semi-annual lobbying contribution report that identifies both firms?
Yeah, and this is a little bit down in the weeds. So first of all, there's no problem with a lobbyist working part-time for two firms or working part-time for a firm and in-house at another organization. That's no problem. And they can be listed as lobbyists for both. In terms of the LD 203 end of this, the system does, the Hill reporting system really doesn't accommodate this well. What you're going to have to do is the lobbyist is going to need to call, you can call the Secretary of the Senate or the Clerk of the House and let them know, hey, I'm working for two employers. You're only going to get an LD 203 from me associated with one of them, and they're fine. And it's best to do that up front. So with respect to the employer where the LD 203 is not associated with it, that doesn't trip an inquiry for non-filing. Okay, so if we could go on to the final slide. To wrap things up, we thought we'd just share a few tips on putting together a lobbying compliance strategy. If you are already a registered lobbying organization or you're contemplating doing so. Number one, It's really important for all the reasons we've discussed today to establish tracking procedures for lobbying activities, gifts, contributions, and other reportable expenditures. It's going to facilitate the timely and accurate preparation of lobbying reports. Again, as we discussed, remember to survey employees on a quarterly basis to collect reportable data, whether that's about expenses, gifts, anything that is subject to reporting under the LDA. Heidi?
Yeah, it's also helpful on a periodic basis to provide training or other materials to employees about the rules, especially if those employees, if their activities trigger violations or reporting obligations. This is most commonly done when you have new employees or their updates to the law, to the way things are reported, or interpretations. It's also helpful to have a go-to person who can collect and respond to the employees' lobbying activity questions. That person should also have access to outside assistance for anything that they can't answer.
And if we can go to the final slide. If any questions come to you after we sign off today, here's our contact information. We'd be happy to respond to you and point you in the right direction of it. We'd like to thank you for logging on today. And a reminder again, we've got 2 more sessions coming up in our boot camp, and we look forward to seeing you at those sessions. And with that, thanks for logging in and good afternoon.
Thank you, Jim and Heidi, and thank you everyone for attending today's webinar. Reminder that you will receive a follow-up email within 24 to 48 hours with a link to view a recording of today's webinar, as well as a copy of the slides. On behalf of Whiteford and our presenters, thank you for joining us and have a great rest of your day.